I'm Michael Fox, and this is the Prospector Podcast. And I have joining me the Gold Advisor, Jeff Clark. Welcome to the show, Jeff.
Great. Thanks for having me, Mike. Appreciate it.
Yeah, well, we tried to get together a few weeks ago when we were both in Beaver Creek at the Precious Metals Summit. But I think the extent of our interaction with each other was waving at each other across the busy room as I was going one direction and you were going in the other direction.
Yeah.
What were your thoughts about Beaver Creek? I thought it was a pretty good show.
Oh, yeah. I think it was a strong show. Maybe not the biggest attendance they've seen, but Beaver Creek is very productive for me. For those that don't know, it's basically one-on-one meetings with companies. They have some presentations, but I think I had like 34 meetings scheduled and ended up with 36 or something like that. So you get to meet directly one-on-one with the company CEO or GO or whoever. So it can be very good information. It's you got to move quick at that conference. It's spread out over 3 buildings, but at the end of the day, it's very productive. I got some new picks out of it that I'm going to be issuing in my letter, reinforce some things about companies that I already recommend. I did a big summary of my picks, the free picks of the Gold Advisor. Then I did another summary in the paid letter of all the companies. So all around, it's very productive, and it's very exciting because I think we're in the right place at the right time with the right metals, Michael.
Yeah, I agree. I didn't attend the show last year, but I was there this year, and from what I had heard from the feedback from people that had attended last year, that seemed to be the bottom of the market capitulation moment was happening during Beaver Creek last year. And this year, I wouldn't say we were over the moon of buoyantly happy, but we're a little bit more than cautiously optimistic that everything's kind of heading back in the right direction. So, I was kind of heartwarmed by the response that I saw there, and like you, yeah, I had 30, in the 2.5 days that I was there, I ran through 30 formal meetings while I was there, and probably at least that many informal 5 or 10 minute chats where you could kind of fit them in. So yeah, it was a very, very busy, very productive time. But you ran right from Beaver Creek. You went up to the Metals Investor Forum up in Vancouver, and your presentation there is what I found particularly intriguing. You talked about the macro of the precious metals as we ran through that counter trend rally through the spring and the summer. And you went on record to saying that this was probably an opportunity of a lifetime to be looking at buying precious metal stocks. So let's start with the macro view and how you got to that conclusion.
Well, yes, that talk was titled "Are Mining Stocks the Trade of the Decade?" It's on YouTube if anybody wants to Google it to find it. But I made a case for why they are. And I do think we're at that point where, this is something you don't want to give up on. I know that we've been down for 4 years. Most stocks have been down for 4 years. It's been tough to be patient, but if you've been disciplined, don't give up on your discipline now, because I do think mining stocks are about to turn. And there's 3 reasons why I think that. Just real quick, Michael, one is, the fuse for junior's been lit because we've seen the jump in cash flow from producers. And I track this, and it's in the presentation, but there's a nice table in there that looks at the earnings and free cash flow of the top 6 producers, at least the top 6 in North America. And it compares that to a year ago. And I document the percent change. And the percent change for these companies for earnings was double digits across the board. for free cash flow, and many analysts think free cash flow is, the true barometer of corporate health, right? It's better than earnings because it's easier to tinker with earnings, but free cash flow is harder to do that. And in that case, 5 of the 6 companies saw their free cash flow jump by double digits or triple digits. Only 1 was flat. And all of that, by the way, was based solely on the gold price. It was simply an increase in the gold price from 1 year over the next, Q2 last year to Q2 this year. And the reason I bring this up is because we know from history that when money flows into the gold market, when we have a new bull market, the money will first flow into the metals. Well, we have that obviously with gold hitting record highs, right? And then it flows into the bigger companies, the seniors, the producers, and that. And as I just outlined, there's now incentive to do that. And we have seen some of the better companies. Just as an example, I think Agnico Eagle is one of the stronger gold producers there is. And, they saw a big jump in earnings and cash flow, just like these others did. And we're starting to see some of these stock prices move higher. We know from history that the money will then flow down to developers, and then it'll flow down to juniors. So when I say the fuse is lit for juniors, it's based on that fact. And I think the fuse is lit. It's just a matter of time before we see money begin to pour into our tiny little sector. Again, based on history, we don't know how long that fuse is, but I think it's coming. And that's why I encourage people not to give up on your junior stocks. It doesn't mean you're going to keep all of them. Some will have to be sold because they're just not going to rebound. So focus on your strongest. But I think that we're about to see a shift in this industry. And I think a year from now, Michael, we're all going to be a lot happier.
I wouldn't disagree with anything that you just said. The thing that I always wonder is when you have a window of opportunity like we're currently sitting in, how long does that window stay open before things start to move? And I always liken to something that Rick Rule told me way back. Oh, this is probably 2016, 2017, was that this market was likely to be in a stealth bull for several months before anybody actually noticed. And I'm kind of looking at it right now and going, yeah, we've kind of been in a stealth bull here for about the last 3 or 4 months, and nobody's actually noticed. So how much longer before they do notice?
No, that's a good point. Yeah. You know what? It might be happening now because I've seen some stock prices start to move up in the juniors. But more importantly, what I've seen is there's a lot of interest that's building from big investors, funds, institutions, high net worth, et cetera. Because in the first half of this year, believe it or not, this is hard to believe, but miners raised the most cash in the first half of this year in a decade. So there was a 62% jump in financings in the first half of 2024 versus the first half of a year ago. They raised $6.8 billion versus $4.2 billion. It's the highest amount in a decade. And it's not let up, by the way. Now, this is about a month old, but through August, there was $2.9 billion raised. So we're on track to continue that pace that we saw in the first half of the year. Another thing is there was 25 IPOs in the first half of this year versus 11 last year. I think that the big money is starting to move in. And we've seen just over the past few weeks, we've seen some fairly large financings with smaller companies, not just the big ones, but with smaller ones. So I think that fuse is getting closer for us, and it just may be ready to reach us here real soon. That's what that data is telling us. And you're right, it's contrary to sentiment in the industry. We've got a sleeper bull market, a secret bull market. I like how you put that.
Yeah, just last Friday alone, like there was almost $75 million worth of financings that were done by small junior companies. That was just on one day of that week. Now it's Friday. A lot of these things close on Fridays, but still, that was marketing. The other metric that I often watch for a sign of life in our industry is the M&A activity, and I've noticed
Hmm.
that has picked up significantly. Just like there was an imaginary pistol got fired up in the Colorado mountains when we were at Beaver Creek. There's been a lot of M&A. The biggest, obviously, being the Cisco mining being taken over by G2 Goldfields. But no, sorry, it's Goldfields, not G2 Goldfields. That's a subsidiary company. But there's M&A happening, and it's continuing on. I've seen a lot more activity in the option market where people are optioning properties off of other companies too. Have you
That's
noticed that?
interesting. Yeah. The volumes have not really jumped generally. They've jumped with some companies, but not across the board. But I agree with you on M&A. I think it's going to come. One reason being these producers, as I just pointed out, have a lot more cash now. A lot of us wondered why the heck are these uh, producers and big companies not buying these ridiculously cheap juniors while they're so beat up. They could buy three or four of them just with their, cash alone. And they haven't. Well, maybe one reason is because they were playing conservative until the gold price was higher and sustainably higher. We have that now. They have more cash flow. I think we're going to see a nice increase in M&A going forward. And by the way, it's still cheaper for companies to buy ounces than it is to hire an exploration team, go out and drill and try to prove up and all that, even if it's a brownfield site. Um, it's not to say they can't be successful with that. It's just saying that it's cheaper to buy them. So, given that fact, and given the fact they have cash, I think we're going to see M&A increase here, Michael. I agree.
Yeah, the other thing that's also happening is with the majors, at least their stock prices have been riding on the upward trend, while the developers and the explorers have not. So that would give the majors an opportunity to use their paper as currency in some of these M&A activities, and basically there's a bit of a positive trade when their paper's trading higher and the other paper isn't.
Yeah, that's a good point. That's a fair point, but please don't tell them because we want our juniors to jump and go 5x or 10x first, okay?
Oh yeah, no, definitely. Like wait till we're up at least another 10, 20 bagger before you do that, majors, because the rest of
Right.
us would still like to cash in.
Right, right. There's
So
another thing going on too, Michael, and that is now I'm not a technical analyst, but I'm seeing more and more um, technical analysts point out how the juniors are actually percolating here, and they're breaking out or ready to break out, depending on how you measure and all that. But Tavi Costa, who's a friend of all of us at Crescott Capital, just pointed out last month that the gold junior miner ETF GDXJ, when you look at their candle chart, um, strong downtrend, never broke above that downtrend line. And all of a sudden, here last month, it broke out. And it broke out and sustained that breakout. Looks like 1, 2, 3 months in a row. So that's just more evidence that I don't know how long this window will be open, Michael, but I think it's still open, but it might close soon. And to get the really, really cheap stuff, things that will double overnight just because, money starts to come into the sector. We'll see some of that. I think we're getting closer and closer to that. So all I can say is I'm buying, I'm selectively buying, and I'm preparing for it.
Yeah. So if someone is out there listening without mentioning company names, what are the factors that you look for when you're choosing a stock to buy? You know, if the window's open, you know, lots of stuff could come through the window, but you need to be selective.
Oh, absolutely. You have to be selective. And if you don't want to do that, or if you don't want to join a newsletter or whatever, then, just buy GDXJ on a dip, of course. But for me, that's not what I want to do because I don't want, because with an ETF, you're going to get the bad with the good, right? Any fund, even a mutual fund, even some of the better ones, you're still going to get the bad with the good. So I want to pick stocks, and that's what I focus on. I think some of your audience probably know I wrote a book just to answer this very question. How do you pick mining stocks? It's called Pay Dirt, and I follow what I wrote in that book, and there's 17 other people in it, all the way from the Rick Rules of the world down to geologists you've never heard of, giving their advice on how to pick. But you always want to start with the three legs of the stool. People have probably heard this before, but it's the people, the politics, and the property, and it's in that order, by the way. But I'm looking for the strongest people, not just good people, people that have experience, people that I like when I meet them. I'm looking for someone whose stock and the last company they ran rose. I want to see that they've created shareholder value. And you can go back and look at that. Look at the last companies they ran and see what the stocks did. And the second thing I look for in people is I want to see how much money they have at stake. Are they at risk financially? Because I want them to be aligned with me. And so I look for that. I actually met a CEO once, Michael. It was at a conference. I'll leave them unnamed, obviously, but I asked him how much have you put into the company? He was pitching me on it. He goes, "Oh, I haven't invested in it." I'm like, "What?" He goes, "No, no, doing this and that, blah, blah, blah." And I'm just like, why would you expect me to buy your mining company stock when you haven't put your own money into it? It was ridiculous. So, I mean, I walked away and wished him good luck. And I've never, and by the way, that stock just went nowhere. Now, a lot of stocks did, but this was pre-COVID, when the stock could have done something and it didn't. And then I look at politics. I got to be in a pro mining jurisdiction. You can't move the deposits. Therefore, you have to have a strong history of rule of law in that country or that jurisdiction. And if not, then I don't invest there. A lot of companies in West Africa were kind of after me and wanting to get in the letter and that. And I just never did it. And now you can see what all's happening over there, and those stocks are really suffering. So now it's not to say I may not go back, but at some point, but not right now. And then last, I look at the property. That you do want to look at the property, obviously, but I look at things in that order. If the first two don't work out, I don't really care what that drill result is because I have to have the strongest people, and I have to have being a pro mining jurisdiction. And the main thing about the property is you want the same thing as my grandma's chocolate chip cookies. You want big and rich. So that's kind of the starting point for me is those three things. And then I go on from there. Lots of detail in the book. I'm not trying to sell it, just saying it. There is a lot of detail in there, and I follow that. But I think that's a pretty good starting point.
Yeah, I would agree. That's very similar. I more or less use a horse racing analogy. I go jockey, horse, track, but it's basically that's the three legs of the stool, anyways. The people,
Yeah,
the
that's a good
property,
analogy, Michael.
and the jurisdiction. So, we're following the same pattern with different words. It's kind of hard to disagree with you, Jeff.
Well, good. It's worked for me. It's been tough the last 4 years. I have many stocks that are down, just like everybody else. But I'm not going to give up because what's interesting is remember we had COVID and just everything crashed. Well, some of the values of these miners are as cheap as or more cheap than they were at that time after the COVID crash. So the bargains are there. It's just a matter of when that fuse hits our sector and then blows it up.
Yeah, well, it's one of the lessons in economics or in finance I learned. The first one was you buy low, you sell high.
You're right, right.
So
And that's
I
what we have
agree
right
with.
now is,
Yeah,
yeah.
and that's what struck me with your presentation at Myth was that you were really pointing out the fact that this is a decade's opportunity to buy at the very lowest levels that these stocks are at, and that realistically, as you say, the fuse has been lit, and all they can do now is go higher. But you also have to be you have to be in the right car, otherwise, you could be left on the side of the road while everyone else is passing you.
Yeah, that's right. And, I like what Rick Rule said. You and I were talking about that before we jumped on, but I like this quote from him. This is about a month ago now, but he said, I've been a fairly consistent deployer of capital for the last 3 weeks into the disgust of many people in the sector. So that's really true. He's buying the disgust, the abandonment of the sector. And that's exactly what you have to do. And getting things at those prices at that level, I think some are going to be easy doubles and triples.
Oh yeah, I'm surprised at how cheaply I bought some of my stocks in the last several months, and there's still bargains to be had out there. So it's definitely a good opportunity and an opportunity time. So if people want to subscribe to your newsletters and to get more of this advice. And I know in your paid stuff, you get more specific about which stocks you're buying and why you're buying them. How would they do so, and what's the cost? And I understand there's a bit of a free element to this. So
Yeah, there's
let's pitch your work.
Well, there's basically two things, and one is free. It's at thegoldadvisor.com. I have 21, I believe, stocks in there right now, and we cover them just like you were paying for a regular newsletter. So we provide newsletter quality analysis for free on these stocks. You do have to create login credentials, but it's free. It is a sponsorship site. Some people don't like that when they hear that. I understand, but understand that I don't just invite anybody who can write a check. A lot of companies, frankly, ask to come on. And I would say one out of three or four, sometimes one out of 10, get invited because my reputation's at stake. And two, I'm an investor in these, and it has to be a stock that I would buy. And if I wouldn't buy it, I'm not going to put it on the site. But anyway, that's all free and regular analysis. It's an almost daily newsletter. And then for Pater Prospector, that's the subscription service. It's relatively inexpensive. That's on this site as well. And that is where we get it a little bit, take on a little bit more risk, a little more early stage. But of course, sometimes those can have the biggest, see the biggest gains. So I wanted to share that with people because my portfolio was actually up in 2023 when obviously most people's portfolios were not. And so I wanted to sort of pay letters to share that. Again, it's not expensive, relatively speaking to other newsletters. So that's what I share there. And I do own all those stocks as well. It's a total over the shoulder look at what I'm doing, and you can follow along if you like it.
And where would they find your book? Because as someone has read the book, it's a good read. And if you're an investor in this sector, there's some good advice to be found in that book.
Yeah, thank you. It was a lot of work. It took 2 to 3 years to do off and on, but I'm so glad I did it because I think it needed to be done. There's a link for it on the website as well. Peter Krauth has his silver book there also. But Pater goes, it's basically a how to buy and identify the best mining stocks, and it goes through everything. It's a fun read. It starts out with a mine site visit that might make some of you claustrophobic, so that's kind of fun to read. So you can see what you think. But there's a link to buy the digital version online. You can also go to Amazon, and there's a link there as well. You can buy it for your reader. So lots of ways to get it.
Yeah, I use that particular mine site visit as a reason why I don't do mine site visits. So it's been a very valuable tool for me personally. But
Yeah, that was a very interesting visit. And for anyone listening, if you read it and I don't name the company, but I'll tell you who it is if we ever meet someday and you want to know. So,
yeah, well, I'm a little claustrophobic, so yeah, I was kind of crawling off of that.
yeah, well, it was very interesting. I'll put it that way.
Well, this has been a wonderful chat. It's good to get caught up, and yes, I encourage our listeners to follow Jeff and Jeff's work. It's an excellent resource point for people that have an interest in this sector. So I'm sure between now and the end of the year, we'll our paths will cross again, and I look forward to having another conversation like this with you.
Absolutely, Michael. Thanks for having me, and I'll probably see you in January in Vancouver.
Yeah, I think that's where our next pass cross will be. I guess I lovingly refer to it as Mining Week. There's MIF followed up by the Vancouver Resource Investment Conference, followed up by the roundup put on by the Association of Mineral Exploration of British Columbia. It's in around about the 20th of January, give or take a few days either side of that. So it's a pretty heavy
that'll be
lifting
fun.
week, but it's a lot of fun.
It is a lot of fun. It'll be productive. Get to meet a lot of people too, especially at MIF, because it's a smaller, more intimate conference. So I'm looking forward to it. I can't wait, actually.
Me neither, but we got to get through the rest of this year first. So,
yes.
until January, Jeff, take care.
Thank you, Michael. Same to you.
The Prospector News Podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.